Hello, hello. Hope you guys are doing great. As always, I am going to check my phone and make sure that we are live and you guys can hear me. If you're here with me, please grant StreamYard permission so I can see your name. Let's see. It looks like I can see it. You can hear me. Awesome. If you're here live, like I said, go ahead and grant StreamYard permission so that I'm actually able to see your name in case you ask any questions or anything. And if you are watching this on replay, do me a favor and in the comments, please write #replay because that will really help me with the algorithms. Now, I am streaming live into my Facebook community, The Profit Factor, my YouTube channel, which goes by the same name. And we're also going into my Facebook business page, The Chic CFO. Now, what we do for those of you who prefer audio only, we also repurpose this audio recording onto the Profit Factor podcast, which you can find over on Apple Podcasts. Now, if you are new here, my name is Danae Wolf. I am a financial clarity coach and a profit strategist, which means I help entrepreneurs like you understand the money side of your business so that you can increase your profits and decrease your stress. Simply put, I genuinely believe that financial literacy is the best way to achieve wealth. So, my goal through my small corner of the internet is to help you guys understand the way that business finances work. So there is no question that is too stupid. There is nothing you ever need to feel shame or embarrassed by. Ask away. I will answer away and help you to become more confident so that you can really take control over your money instead of it continuing to control you. Now, over the next couple weeks, we are going to have tons of content. I'm so excited for this first quarter because as you guys know, it's tax season, right? So we as entrepreneurs have got to dot our I's and cross our T's. So we are going to be getting into tons of really tactile advice that is going to help this tax season hopefully be the smoothest one yet. Now, today we are talking about how to close out your books for 2021. Now, the first thing that I'm sure you guys are thinking is, what is that? What do you even mean when you say, how do I close my books? Well, closing your books is the process of finalizing your financial records over a certain period of time. I am suggesting you do it at year end because at minimum, you've got to have it done for the year to get your taxes filed. But in a perfect world, I'd love you guys to actually close your books every single month. Here at the Chic CFO, I close the books monthly for my clients. But if you all have not been closing your books every single month, then we're going to have to get it done for the entire year of 2021. Because this process of closing down the books is how we ensure that your financial reports are correct. If your books are not closed down, then you're unable to guarantee the accuracy of your financial reports. And if you can't guarantee the accuracy of your financial reports, then your tax preparer is not going to be able to guarantee that your tax bill is accurate. And you don't want to deal with that, guys. Here's the thing. I want you to pay the taxes you owe, all right? But I want you to pay exactly what you owe. I never want you to pay even a penny more than what you owe. And the only way to make sure that you are not paying any extra taxes is to close your books. And I think that a lot of times it builds up and people wait till now to worry about getting their books in order for last year. And I get it, we're procrastinators, it happens, it's human nature. But I really want you guys to just understand the importance and the significance of it, because if your books are not closed, so they haven't, think of closing them as going through a quality check, okay? If that hasn't happened, it is very likely that you are going to pay the wrong amount of taxes. Whether you pay over or under, who knows? But you don't want to be in either of those situations. Also, I'm going to get on my soapbox for 2 seconds because you guys hear me say it all the time. Utilizing bookkeeping in your business, right? Closing down your books. Yes, this appeases Uncle Sam. That is the topic of today because we're in it. We're in tax season. But I want to also remind you, closing down your books, which equals accurate financial reports, equals accurate data. That data needs to be the base for every decision you make in your company. Because the truth is, if you don't know what's going on in your bank account, you don't know what's going on in your business. You need these financial reports to be accurate so that you can strategize, so that you can be the chief operating officer of your business. So you can be the executive officer. So you can put that CEO hat on and know that you're leading your ship the right way. Numbers don't lie, but we need to know what they are so that we can make these smart decisions. So what we're going to outline today are the specific steps that you can take in order to make sure that your books are closed for 2021 so that we know we're dealing with accurate reports when we go to file our taxes. So the very first thing I want you guys to do is go through every single bank statement for your business bank accounts and any credit cards that you have for your business. And what I want you to do is record all of your income and all of your business expenses. Now, here is some common mistakes that I see entrepreneurs make when they're going through this process of recording income and expenses. Number one, when you are working with your income, I want you to make sure that you are not just sort of looking at all of the deposits that came into the bank, because it's very possible that one of those deposits could be maybe personal money that you added in. It could be maybe a transfer from another one of your accounts, right? We don't want those numbers to count as revenue, because then what's going to happen? We're going to overpay in taxes because we're inflating our income. So I want you to be very, very careful when you are allocating what you're listing as your revenue. The other thing that I want you to do when it comes to recording your revenue is I want you to log into your point of sale software if you in fact use one. So maybe you are using ZenMaid, right? Or which is a kick-ass software, by the way, but maybe you're using ZenMaid for your cleaning company. Maybe you're charging your clients through Stripe. Whatever the method in which you charge your clients, I want you to log in, take a gander at those reports, and determine what your gross sales were for every single month. Okay. And we'll get into the importance of that in a little bit. But that's how you're going to deal with your income, ensuring that you've recorded what was business revenue every single month. Then you want to record what your business expenses were. Remember, ladies, your mani-pedi is not a business expense, okay? We should not be commingling funds. In a perfect world, your business statements, bank statements, are only going to show business expenses. But if you have been commingling funds, I need you guys to back those out. We only want to record transactions that are, in fact, business expenses. And there's going to be a couple of ones that don't apply, which we'll get into in a little bit. So that's really step one, going through all of our bank statements, going through all of our credit card statements, and recording all the revenue and all of the expenses for the year. Then you need to reconcile each month for every single account that you have. Now, I know the term reconcile sounds accountant jargon, like sounds like accountant jargon and just sounds like a ridiculous word, but let me assure you, this is a very easy process. All it means when I say you need to reconcile the books, all it means is you are going to look at every single statement for every single financial institution for your business. So if you have a business checking account, if you have a business savings account, you have a business credit card, right? What you are going to do is you are going to print out that statement. Best practice, I like to print it out. I like to get a highlighter and a ruler, okay? You are going to use the ruler to go line by line on this statement. And what you're going to do is compare what is on the statement to what is in QuickBooks Online. Now, those of you who are thinking, oh my goodness, I don't use QuickBooks Online. I don't know what that is. I don't know how to use it. Don't stress. I have another solution for you that we'll go over at the end of this training. But whatever the method in which you are recording your transactions, you need to make sure that you check that space. Those of you using QBO, that's where you're going to go. And you're going to make sure that every single transaction that's on the statement is also on your books. If it is on the statement but not on the books, you've got to manually add it. And in QuickBooks Online, it's very easy. You would navigate to the left-hand side, hit the little plus sign, and it'll ask if you want to do an expense or if you want to do a deposit. But you want to make sure that both places are the same. Whatever's on that bank statement has to be in QuickBooks Online. Otherwise, our reports are not accurate. And if it's a situation where maybe it's in QuickBooks, but it's not on the bank statement, you're going to go ahead and delete that out of QuickBooks Online because, again, we want them to mirror each other. Now, back to what I was saying 2 points ago about matching your revenue with your point of sale. So here is what is going to happen for many of you. If you are a business who utilizes a software such as Stripe, which I know a lot of you do, it is a very popular software. What Stripe does is they actually remove their fees before they release the money to you. So let's say you had a sale for $1,000. Stripe is going to remove their fee. And let's say what you get deposited into your bank account is $995. All right. You do not want to list your revenue as being $995 because that was not your revenue. Your revenue was $1,000. Then you had a Stripe fee of $5 and your net was $995. And this is one of the absolute most common mistakes that I see. People take all of the Stripe deposits and they simply log it as revenue. But that is not the proper way. And I want to explain why, because I think it's really important when we are talking about this small business accounting stuff, which I know can get so incredibly confusing. I like to explain the why so it doesn't seem like it's just a silly rule. Okay. What happens is companies such as Stripe report your revenue to the government. So the IRS is going to receive a document from Stripe that says, hey, your revenue was $1,000. Well, if you then report to the IRS that your revenue was $995, there's a red flag in the system because it looks like you are underreporting your revenue. The reality is that the net is the exact same. So it is absolutely not tax evasion. However, it still triggers an alert, which can absolutely increase your chance of audit. And even though the net effect is the same and you wouldn't owe taxes there, they might find something else in that audit, right? We don't ever want to be in a situation where we are doing something that can trigger anything when it comes to Uncle Sam. All right. So we want to make sure that if Stripe says your gross revenue was $1,000, that is what you also say, that your gross revenue was $1,000. So be sure to go through that process of matching your financial records to your point of sale. Now, if you are using a point of sale that gives you the full gross sales deposited into your bank account, go ahead and just categorize that as gross sales because you will see the fees come out as a separate expense. Okay, the next thing that I want you guys to do, I want you to go back through all of those expenses that you categorized. And if you have liabilities, okay, so what's a liability? Some type of a loan, right? You might have an EIDL. No, a lot of you guys have that. You might have some type of an SBA loan. You might have a line of credit with your bank. Whatever the case may be, I want you to go through your loans and I need you to split the principal and interest. You are only able to deduct, AKA write off as a business expense, the interest of that payment. So if you log in to wherever, let's say you have a Bank of America loan, if you log in, you pull the statement, you will very easily be able to see for every single month what the principal was and what the interest was. So let's say you paid $400 to your Bank of America loan. It will show you that 50 of it was interest, the balance was principal. And you are going to go into QuickBooks Online, you will hit the split button, and you are going to allocate the principal payment to the liability account, but that interest payment is going to be logged as an interest expense and put onto your P&L so that you can get the tax benefit. The next step I want you to do is go through all of your personal bank accounts and credit cards. So we've already taken care of the business financial institutions, but now I want you to go through your personal because inevitably there is going to be at some point last year where you purchased something for your business with personal funds. Now, if you didn't and you were really meticulous with it, kudos to you, that's great, but it's still worth looking at. I can tell you I am meticulous with all things money, and I went through and saw that on Amazon, I selected my personal credit card instead of my business credit card, and I purchased ink with my personal card. So I want to make sure I get that business deduction. So I want you to go through all of your personal financial institution statements, scan through them month by month. Was there anything that you paid for personally that was in fact a business expense? Now, if you are QuickBooks savvy, you can go ahead and journal entry this right into the software. But if you are not, do not stress. You are simply going to get it all outlined with dates, memo description of what it was for, get it into a spreadsheet, and give this to your tax preparer who will be able to add it to your tax return. Now, what I absolutely want to encourage you to do is make sure that your tax preparer does what's called a tax return to book adjustment. Because what could happen is he or she might take these personal transactions for a personal bank account that are business expenses. They might take it and put it directly onto the tax return, but now there's no record of it in QBO. We want to make sure we've always got QBO mirroring your tax return so that we're always looking at the most accurate financial reports. The next thing I want you to do is go through your AP, your accounts payable. This is essentially who you owe money to, all right? You might be in a situation where you're like, wow, I have 20 grand in the bank. What a great way to end 2021. I kicked ass. But then you go through your bills that's sitting in a big old pile in your desk that you haven't been through, and you realize you owe 22,000 in expenses. That kind of takes away from the excitement of having 20 grand in your bank account, right? So you want to make sure that you really have an accurate depiction of what is owed in your business so that you can really be planning for 2022. So in this process of closing the books, I want you to make sure that you know what is outstanding. Is it past due? Was it due last year? Is it going to be due coming forward this year? Make sure you have a grasp on that. Then you're going to take a look at your accounts receivable, your AR. This is money owed to you. Do you have clients who have not paid? Do you need to send out collection letters? Do you need to contact them, stalk them, send the bat signal, whatever you've got to do to get them to pay you? So this is a really great time of year to go through all of these records and really figure out, who do I owe money to and who owes money to me? And this is also the time that I want you to go through, if you are a product-based business, I want you to go through your inventory. Don't skip this step. It's really important that we know what you have in inventory at the end of the year. Your tax preparer will go in, do a journal entry, get that where it needs to be. That's a little bit too complex, not something I would suggest you DIY. But what you can do is go through your inventory. Make sure it's January 5th, right? Do it right now. If you have not done it yet, do it right now and just find out what is the total dollar amount of what you currently have in inventory. So maybe your hair salon, right? Well, what's the total of all the products you have sitting in your inventory? That is the number that you want to get and make sure that you have recorded for 12/31/21. The next thing that we want to do when closing our books is take a look at what you have recorded as sales tax. So this is only applicable to those of you who deal with sales tax. And those of you who deal with sales tax, let me just say Godspeed, because it's a flippin' nightmare. But what I want you to do is simply log into the website where you're making those sales tax payments and make sure that your records match theirs. All right. Again, we want to make sure any information being reported to the IRS matches the information we are reporting to the IRS. So this is another quality check that you can do to ensure that your file is not flagged. The next thing that I want you to do, and guys, this one is something that I see mistakes made on a lot, okay? What will happen when you are an inexperienced bookkeeper? Which, if you're an entrepreneur, you're probably an inexperienced bookkeeper, right? Because that's not what you do. That's not your zone of genius. But if you are trying to DIY it, I support you. I'm here for you. And that's why we do these trainings, right? But one of the things that I want you to know is that when you see payroll, and when I say payroll, I very specifically mean for your W-2 employees, okay? When you see that come out of your bank account, what is actually being debited from you is the net payroll. So let's say your employee's paycheck was $500, but then obviously their taxes were taken out. Let's say what they got deposited to them was $425. That means that $425 came out of your bank account. If you record that as your payroll wages, what's going to happen is Gusto, your payroll company, and shameless plug for Gusto right now. If you are not using Gusto, get on it. I cannot say enough wonderful things about them. But anyways, your payroll company is going to report to the IRS what the gross wage was. So this is very similar to the concept we learned with the point of sale, right? With your revenue. So the $500 gross paycheck is what's going to be recorded as the payroll wages. So if you are recording $425, which was actually the net, it's not going to match. So you have to make sure that your bookkeeping, whether you're doing this in a spreadsheet or you're doing it in QuickBooks Online, that the payroll expense is actually the gross wages. So what will happen is you're going to see debits come out of your bank account. You're going to see a tax debit and a net payroll debit. Those two numbers combined will equal on your payroll reports what the gross wage was and what the employer payroll tax was. So the numbers will be in total, the sums will be the same, but the way that they came out of your bank account is different. And you need to make sure that they go into your financial reporting system as the numbers on the payroll summary report from your payroll company. Because the numbers total the same, it will make your reconciliation really easy, and it's not anything you have to worry about. You're simply just changing the way the numbers are allocated. And the final piece when closing your books, recording depreciation. Guys, depreciation, no joke. All right. So these are items that you purchased in your business with the intent of them being an investment, AKA them generating revenue for you. So if you're a cleaning company, this might mean you purchased a fleet of vehicles, right? So these are higher end purchases, typically something over $2,500 that you purchased with the intent of it having a return on investment, right? It's something that you invested in hoping it's going to have an impact on your sales and your profits. If you purchased anything like that, and this would not be a service, right? So it's not going to be if you spent 10 grand on Facebook ads. It's not what I'm talking about. This would be like you purchased a car, you purchased a piece of equipment, right? This is a tangible item that you invested in hopes that it's going to improve your financial stance, right? If that happened, I want you to sync up with your tax preparer, because those actually need to be expensed in a specific way that is alive for a different day. But essentially, you are going to get that tax deduction over the lifespan of the asset. They can also look into a bonus depreciation, but that is not the live for today. High level, what you need to know is if you purchased any fixed assets in your business, please let your tax preparer know. All right. Where people typically get tripped up with doing their books themselves is the depreciation, not understanding the way to properly allocate payroll, not knowing to split the principal and interest on liabilities, and not knowing that we need to match our revenue to our point of sale reports. So those are really the bullet points that I want you to take away from this, to make sure that if you are DIYing your books, you are speaking to your tax preparer and making sure that those areas are really buttoned up and taken care of. Now, what I want you to do, and I know it is January 5th, all right? So I know the clock is ticking. What you really want to work to do is to close these books as soon as possible, because 1099s are due January 31st. I don't want you to be in a situation where you are issuing contractors 1099s with the wrong numbers in them, right? And the only way to make sure that the numbers you're reporting for them are correct is to close your books, right? Going through this quality check and making sure, if you report to the government that you paid John Doe $6,000 last year, I want to make sure that that number is right, because reporting that has implications on John Doe, right? And we want to be respectful of his tax situation as well, and make sure, we owe it to them to ensure the accuracy of the reports we're filing. And all of that comes from closing the books, this process of reconciling and making sure that you've dotted your I's and you've crossed your T's. And I know that this all seems extremely overwhelming, but I've done it, so I know you can do this. All right. If you have questions, reach out to me. That's what I'm here for. I'm happy to help. That is the value that I want to bring to this community. And if you are in a place where your head is just spinning and you don't want to deal with this, you can absolutely hire me. Okay. Shameless plug right here. Reach out to me, Danae at thechicCFO.com. DENAI at the chic, CHIC, CFO. payroll.com. We are taking on new clients and we would love to work with any one of you from our community. Now, if you're sitting here going, you know what? I'm not really in a position to outsource this. I'm not really in a situation where I can afford that. I get it. All right. I've been there. I've got you covered. We have a DIY option for you. This spreadsheet is amazing. Okay. It is going to walk you through all of the steps you need to do to DIY the closing of your books for 2021. I have a video tutorial on there. You can import your bank statements. I've really made it do all of the heavy lifting for you. All of the calculations are in there. It's going to automatically tally for you. I think you're really going to love it. And guys, it's only $27. All right. It's only $27. And with some blood, sweat, and tears, you are going to be able to DIY your books and with confidence know that your financial records are accurate. Because remember, I don't want you to pay a penny more than what you owe to Uncle Sam. And I also want you to step into the CEO role in your company. And CEOs make strategic decisions based on data. All right. This is not gut instinct here. They are looking at data and they are making decisions based on what the numbers tell them. You can do that as well. So I hope this training was helpful. Please hop in to my DMs if you guys have any questions. I'm here to help you. And together, we are going to get through tax season and we are going to make it the smoothest one yet. I will talk to each of you soon.